The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 26th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the good in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, let your fingers do the walking. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 34 points, 24,720 is the print. S&P's off 3, NASDAQ 100 down 31 points, 0.5%. Russell 2000 is green. Semis are off at 1% or $12. New York Stock Exchange is green. Transports are up, well, we'll call them flat, but they're up about 4 points. Spot volatility index up 31 cents. Trade out at 10.21. Gold's up $9. Silver's up 15 cents. That's up 0.9%. Light sweet crude up $1.33, a little over 0.25%. Natural gas, we'll take a look at that if you remind me. And if you don't remind me, maybe we'll still take a look at it. To the upside, you've got Bitcoin Investment Trust up 21%, $420. Long Financial Corp, again, that's a blockchain deal, 36% to the upside, $14. United Therapeutics, to my knowledge, is not a Bitcoin or Bitchain issue, up 7% or $10. Amazon's up 8, Martin Marietta up 6, Mercado Libre up 6. To the downside is Priceline off $17. That's 1%. Not a big deal. Coherent Inc. off $9.50. Sage Therapeutics down 8. SVB Financial down 6. Tesla off about $5. But the question is, hey, Steve-O, what are you looking at? So let's do the segment. Steve-O, what are you looking at? The thing that interests me the most as we speak right now, we got the NASDAQ 100. Let's just focus here. NASDAQ 100 off 31 points, 0.5% to the downside. So I go from there to saying, okay, what's going on under the covers? I know you do the same thing. And if we take a look at what's on the underneath, I mean that in a good way, underneath the covers inside the NASDAQ 100, I really start with the 1-hour chart. Now, in the 1-hour chart time frame, back here on December 21st at 3 p.m., you had the what we'll call the bearish crossover. That's when the number of issues where price is trading below the very bottom of its box out there exceeded, just slightly at that stage, exceeded the number of issues where price was trading above the top of a 60-minute profile. You can see right now, it's about to kiss and tell. You can see how that has come together as we speak right now. I don't know if we're going to get a bullish crossover or not, but it is of interesting note. That's on a 60-minute time frame chart. Right now, you got 38 issues above the top. You've got 42 issues below the bottom out there. You'd have to go look at each of those issues to figure out exactly where we're at. But you can see here just by looking at this chart, pretty close. So getting close to the kiss. The next thing that I would look at is the next time frame up, and that's going to be a 240-minute chart. And you can see in this case here, back at the time frame of December 22nd, this was at 8 a.m. as well. You had a nice little bearish cross also. Okay, so that's what I'm looking at. If I take a look at the daily, we're nowhere near any kind of bearish cross out there. You have 37 issues trading above the box, 14 below. That's very bullish out there. Get very bullish. Nonetheless, you know, you'd stay focused on the 60 or the 240-minute chart as a follow-up to this to say, hey, who's lying out here? Is anybody lying? Well, if we take a look at the 240-minute chart, because this is the one that is of most interest to me, what you're going to see is as price formed its most recent high out here, and I don't make this stuff up, I just do the counts and watch the patterns out here. But back at about 6 o'clock in the morning, this is on the trading day of, well, it says you've got to do something or other. Let's see if I can actually get it out here. December 19th. So as price was making its high, moved into wave number 7. Price was also moving higher, doing less relative energy. And you get a nice little bearish reversal signal right here at the very next 4-hour session. That set up the high. What we have right now that is completed as we speak is we have a 1-to-1 A to B equals CD to the downside. Now, from a gargantuan standpoint, if we're talking about gargantuan things, this could be a gargantuan Gartley buy pattern. Now, Gartley buy patterns have 5 different outcomes. Outcomes 1 through 4, well, outcomes 1, 2, and 3, no big deal. 4 is 100% move of move. That means you get back up that 7th wave, and gargantuan forms a new A to B equals CD to the upside. It's a possibility, but in order for it to be a possibility, we have to see things shift. Well, the first thing that we have going on right now, this again is a 4-hour chart, and it's not till 2 p.m., so another 48 minutes from now, will we know what this candle, the current candle confirmation, is. Is this a bullish reversal signal? I don't know. It is as of 1:12 in the afternoon. Will it be at 2 p.m.? What if it is at 2 p.m.? Well, then that is step 1 to completing the Gartley buy pattern on a 240-minute time frame. You'll also note that the blue line on the very bottom panel of our screen, our price oscillator out there, is nearing 0. It's above 0, 443. Should be approaching 0. We should also see price and Stevie's red line, that's at 64.86 right now, catch up to each other. One falls, one rises. It's any combination out there, but that's what we should see, and that is where the metal meets the road, or what is it? I gotta figure out some of those expressions out there, but you know what I mean. Well, if you don't know what I mean, it is where we find out if the NQ is bullish or not. It is really that simple, or if it is bearish or not. If it's bearish, what's going to happen is price, Stevie's red line, they're going to connect, there's going to be rejection, and price will go ahead and resume lower. That's the bearish side. The bullish side, you complete a bullish reversal signal now, you have additional follow through to the upside, price overtakes the red line, and then voila, you have your Gartley buy. And then the other 3 outcomes are 0.382, 0.786, 0.618, a little out of order there, retracements of the entire pattern out there. So to me, that is what's most interesting out there, especially when we take a look at the primary indices out here and see that it is the weakest. Weakest from a percentage standpoint. Yeah, points, you've got the Dow off 32, a little over 0.1%. The same thing with the S&P 500. So that is what I'm watching. What's the outcome that I expect? I expect the market to just tell us which outcome we should anticipate. There's nothing to do right now other than just sit and watch paint dry on the wall. So let's do that for the next 4 minutes. But before 2 o'clock, we'll check back in, especially if you knock on the door and you remind me that, hey, Steve-O, let's go see what's going on that 4-hour chart for the NQ. And that's, hey, Steve-O, what are you watching? We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've got our first request out here from Tom. Tom writes in, good afternoon, Steve. Good afternoon, Tom. I am long UGAZ. Now, that's the triple for being long natural gas, folks, and would like to get your thoughts on nat gas, the UNG, et cetera, out here. So we're going to take a look at We're going to take a look at the natural gas contract. On my screen right now is the February contract, and inside of UNG, almost equally weighted are the January and February contracts out there. So you really need to look at both. We'll look at both two different ways out here. One with this set of charts, Tom, that shows you the different TAS market profiles for the 60, 240 daily and weekly time frames. And the other, we'll take a look at the January contract. Now, I'll switch to the January contract for the moment, and you'll kind of get a feel for the reason why. And the reason why is we were talking about an A to B equals CD pattern when we took a look at the 4-hour chart for the NQ. Well, inside of the January contract for nat gas, it completed a 1-to-1 A to B equals CD pattern. It did this on Thursday. And then on Friday, you had that nice bullish reversal candle out here. You had that nice little bull sash. The only thing that didn't occur on Friday was closing above Stevie's red line. You and I, we talked about how in the case of natural gas, that red line, Stevie's red line, was really important out there. And the moment we saw a close above that, especially while this A to B equals CD was in process, that probably was the bottom. I have to say probably, I have to have a little qualifier. I would say that was the bottom out there. At least it was a entry or a signal that the tide has changed. Now, what we saw take place overnight through right now was we saw price make a nice move out here. It hasn't thus far because it gave back a lot of the gains, and price is trading just below Stevie's red line. So whereas an hour ago or two, Tom, if we were doing the show, I would have said, looks good to me, but don't let price close back below Stevie's red line. That doesn't mean that this can't turn out to be the trade, but I would just like the confirmation. And a confirmation is not just the bullish reversal signal from Friday. Confirmation is that we've overtaken another hurdle, Stevie's red line out there. So, again, UGAZ is trading off of two contracts out here. We could go try to draw the A to B equals CD pattern, but we don't need to. We know that it exists out here. So let's go take a look at what is it you're looking for. Well, inside the January contract, let's see if I can find this little data box out here. There we go. The number you're really watching for is 2.682, and right now you're at 2.677. You'd like to see it close above that. If you do, I'd say, Tom, I like UGAZ. Right now, it's just, why are you making it so tough for both you and I out there? I'd even considered going long nat gas in the newsletter for subscribers out there. But they said, I want to see proof in the pudding, the chocolate pudding out there, as a matter of fact, and we don't have that kind of proof. If we take a look at, now, here's what I do like. Here is February. What I like about February, that big, nice, explosive move this morning, and price pulling back, beginning to pull back at about 6 o'clock this morning to test and reject its 60-minute profile. Now, we have a new profile that looks like it wants to form. That bar has turned orange. Doesn't have to, but it's a pretty good odds favor that we will. Support is held. Support, by the way, $2.65 out there. Support basically is held in the 240-minute time frame out here. Price is still above the bottom of the box, which is 263 on the daily. So I like what it's trying to communicate to us. But to answer your question, what do I think about it? I think it hasn't proven itself. And I think you have to be careful here. I think you just need to be careful. There are parameters that you now can take a look at inside of the what would I be watching necessarily inside of the February contract out here? It's probably getting up to the 270 level, your 267, 269 area out there. You know, then you could be cooking with natural gas. But right now, I'm not sure who is cooking who. So thanks for writing in. I hope that helps you out there. And you see, folks, we didn't have to go take a look at the UNG, which is the ETF. We didn't have to go take a look at UGAZ. And Tom knows that too, because the underlying instrument is what it is that we need to get our head wrapped around, and that is these two, or them two, futures contracts. We have another request out here to go take a look at Apple, and the question is from Top Dog, and Top Dog wants to know, is today's action Apple just a consolidation? AAPL is the ticker symbol. So let's go, let's first type it in correctly out there and see if we can go figure that one out. While we do that on my other screen out here, I'm going to go ahead and type in the symbol so I can get a feel for that. So when we take a look at Apple, and what I don't know, Top Dog, when you say consolidation, is what your time frame is that you're looking out here. If what you were suggesting by asking that question, is this in a consolidation, and you were looking at the weekly time frame, our answer would be absolutely positively yes. No doubt about it. And what we can see out here when we take a look at the weekly time frame is we can see a TAS profile at the bottom of the box of 166.73. We saw price down there a few weeks ago, the week that began December 4th. 166.46 was the level. Didn't get all the way down there. It was close enough. Actually, it did get down there and kind of rejected that level. Then last week, we saw price test and reject. By reject, I just simply mean close back below the top of that box, 176.24. So, yes, we have a gap to the downside, but we are really, or it is, just simply trading sideways, but within that range. Now, that could mean that price is going to get down to the 166.73 level out there. And I really think it is the weekly formation that's providing you, Top Dog, with the best picture out here. Now, if we take a look at the daily chart, here's what you and I know. We know that prices pulled back into the December 6th swing point. And if it closes anywhere underneath 170.20, you're at 170.44, well, then price can go down and test the bottom of that swing point. That's 166.46. Volume there was 28.5 million. You are at 23 million as we speak right now. Apple is pulling back with volume, right? It's pushing lower with volume. It's going to have more than 28.5 million shares at day's end. How do I know that? Well, I don't, but you've already done 23 million shares. So even if price rejects, that means closes above 170.20, we're 20 cents higher right now, price will be back down to the test, at least the top of that level of 170.20 out there. And if price closes inside, below 170.20, then you can rest assured, well, that consolidation to the downside, yeah, it's going to continue to move lower. And it'll test 166.46. Now that is what you're going to really be watching for. Because if price is moving lower today with volume, it means it could do it tomorrow. And if it takes that level out, well, what did we say was the bottom of the consolidation? Is probably right in that area, 166.73. What's that swing point level? The low there is 166.46. Yeah, you take that out, and you've got a pretty sizable move to the downside, at least another 10 buckaroonies. That was for top dog. Steve Rhodes with TFNN. The Dow off 28 points. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Phil wants you and I to take a look at, I went to James, so that was another one. Phil's gone. Oh, man, so did that one. What the heck? Okay, there we go. We're back. So Phil wants us to take a look at the CVRR. Says there are several versions of A to B equals CDs one could draw with different targets as a result. I wonder how you would assess the targets here. Thanks, Phil. So this has been a little rocket ship. Today, also a rocket ship up here, so another wide-ranging bar. We're looking at daily, weekly, and monthly. So from left to right, those are the charts that we're taking a look at. I'm going to go with the monthly. So, Phil, what I would do when you have, and it's because of the nice little stair step that you see here on the daily chart, folks. So what Phil meant by saying there's a number of different price targets out here with regard to A to B equals CDs, in essence, here on the daily chart, there's really, it's a visual thing. Most certainly, we're all visual. That's a good thing. Your A point is going to be down here around August 14th. Your B point, one could choose right out here, let's say October 12th, and your C point down there on October 24th. Another one could be coming up here to the November 8th, pulling back to the lows on November 15th. The one that would really kind of suit my eyes more so is the first one. That's with the high out here on October the 12th and the low down here on October 24th. And if you take a look at your B point out here, on the daily chart, it was 646,000 shares. It was crossed with wide price spread, accelerated volume. And that's what you want to see for your A to B equals CD to the upside. Now, in this case here, you can see that it hit the 1-to-1 level of 1505. It did that on Friday when it got up to a price point of 1505. In other words, hit it to the penny. You got to love that. Ring the cowbell out there. Not that CBRR has anything to do with cows, but and a lot of people, I don't know who a lot is, but some people might have said that's the time to sell. It just completed a 1-to-1 A to B equals CD. But we would say, not true. Don't do that. Do not do that. Wait for some type of confirming signal out there, and you certainly did not get it today. So today here on that daily chart, Phil, the next target is very simply the next A to B equals CD pattern. That price point is 1805. Can it go beyond that? Most certainly can. 1990 is the 2.0, version 2.0, as a matter of fact. But this thing looks long and strong. What I was going to say, and now I'm going to say it, is when you start to get maybe confused about, hey, which A to B equals CD pattern, is this from a price target standpoint? Because that's exactly right. When Phil said target, that's what we use this pattern for, as a target price area. And then we watch for the market to communicate to you and I what it wants to do out here. Well, when we take a look at this, it simplifies it by looking at a longer-term chart. In this case here, just curiosity with regard to volume, 11 million shares on January of 2017. You are only at about, was this passed? Yeah, it was. It was passed with 11.3 million shares in November out there. So where this is likely headed to, Phil, it just simplifies things altogether. Forget about the A to B equals CD pattern. Price at this stage is headed back towards its little consolidation area, last swing point, and that is November of 2015, and that is 2274. That's between 2274 and 1861. So that's a monthly chart, but that is where price is headed to on this little puppy dog. Let's go take a look at the request out here. Our man Z and the Tigers don't want to take a look at feeder cattle, which I don't trade feeder cattle at all, Z, so I just need a little bit of help out there with regard to, is live cattle, is that the same thing as feeder cattle, or are you looking at milk out there? But you also want to take a look at cocoa. So if we go take a look at cocoa out here, you didn't give me a time frame, though. But let's go. I think I can pull up and hey, it is that time of the year to be drinking cocoa. In fact, I went ahead and made a cup of, as I was cleaning out the Keurig coffee maker, which I don't drink coffee. And people said, some folks said, hey, coffee maker's not working. And of course, I said, when was the last time you cleaned it? And the answer is, oh, you can clean those things? So then I went ahead and we had that thin mint cocoa, which nobody seems to like. So I, just to test it, ran that. It smelled pretty good. I almost thought about drinking that cocoa. But nonetheless, that is just simply going way off course out here. Yeah, we'll take a look at cocoa. Here's what I like about the continuous contract on this screen, because I don't have the contract yet in my symbols out here, but I think we're looking at one and the same. In this case here, you've got an A to B equals CD. So they seem to be all, hey, all we're talking about is basically going back to school. Now, in this case here, the A to B equals CD pattern that sticks in my craw out here is this one where it's like a 1 to 2, a little bit more than a 1 to 2, A to B equals C. That's one of them. The other one that you could draw doesn't really matter because they're both going to basically have confirmed today, or so it looks like it. Here is your 1 to 1.618, A to B equals C to. Either way, it doesn't really matter. We use these as guidelines, just like Phil was, just like Mr. Z is in the Tiger's Den. And so far, we have a bullish piercing candle. All the price has to do is close in the center of Friday's candle out there. Now, what you need to see, what we all need to see, we got to get price off that wall, and that wall is 1877. When I take a look at the continuous contract there, that is Stevie's red line. You want to see price fail at that level. You want to see price close above that area. And in a piercing candle, you always like to see follow through on the very next trading session out there. Now, that's what the daily chart is communicating to you and I. Let's go see what the futures contracts are providing us with kind of data. So let's go take a look at it. In this case here, we can take a look at the active contract and look for TAS market profiles that will assist us in asking the question or answering the question, hey, how about a cup of cocoa out there? And if we take a look at it, it is just the 60-minute profile right now where price is trading above the top of its box out there, and that's 1855. So that's short-term bullish. We took a look at a daily chart. That is clearly, at this stage, short-term bullish. What this shows us, and what I would be looking at, is I'd say, skip the 240-minute chart up there. Let's set our eyes on the daily time frame. And the reason we want to set our eyes on the daily time frame is we can see that on Friday, on that flush through to the downside, price cleared support. And this was a bullish support area. You might say, because I would be saying the same thing, what do you mean a bullish support area? And what I mean is when we turn price off, you're going to see that this TAS market profile, the center of that box, much closer to the bottom, this says the bulls should have been able to have held the bottom of that box at 1884. They did not. And when they do not, it says, be careful out here, because maybe there is a continued trend to the downside out here. And that what we are seeing today could be nothing more than a counter trend rally. Remember, price has not tested Stevie's red line, nor has it tested the bottom of that box. So in summary, 1884 has got to fall. Price has got to be able to clear that level. If you see a close above 1884, then it's back inside the range, not the way Tom talks about a range, but the free range out there, the freedom to head to 1959. 1884, that's the number. We get back from this break, we'll go take a look at whatever other questions have come in. One of those is going to be seeing if we can go take a look at feeder cattle. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So James writes in and says, hi, Steve. With infrastructure, sorry about that, folks. With infrastructure, you say the word infrastructure, and it's almost hard to say that word without hacking away out here. But with infrastructure on President Trump's mind, I'm looking to go long and buy a cat out here. What would be a reasonable entry price? Thanks, and sent from his iPhone out there. Well, here, as we take a look at, he wants to buy a big cat. That would be Caterpillar out here. This is the monthly chart for Caterpillar. This is the cool thing about this A to B equals CD pattern that you and I have spent some time on this morning. And that is formed a beautiful monthly Gartley buy pattern out here. Now, this is the A to B equals CD to the downside that began the month of July 1st, 2014. That's your A point. Your B point is the month of March 2015. Very shallow retracement into May 2015. And it completes that 1-to-1 level in January 2016. Forms a nice bullish reversal signal on a monthly basis. That's a Gartley buy pattern. And all Gartley buy patterns, as we say, have 5 different outcomes. Well, this happens to be an outcome number 5 right now. And that it turned out to be a new A to B equals CD. So, James, the buy point was really down here in the $68 level, not necessarily so much the 156 area. In the 156 area, by the way, the 1-to-1 A to B equals CD was 151.60. Does price have to stop there? No, it doesn't. Probably headed to 177.51. But this is a momentum trade out here. And I would just have to say, James, that is probably best. Doesn't have to be this way, but probably best to really be able to time the market on this one. In other words, we're going into what could be, what should be, what likely is the unfavorable portion of this season. Santa has come and gone, by the way. Checked out. Probably drinking some of that cocoa, getting ready to eat a feeder cattle, and has the legs up out there. Listening to some Jimmy Buffett music out there, for goodness sakes. Hey, the weather is pretty good down here. And so with that being said, you got to get the market correctly, probably, at least, because you don't want to be trading this from a momentum standpoint, even if President Trump is talking about infrastructure. Lord knows how long it'll actually be before they can get that rammed through. Ram tough out there with regard to cars and trucks, or trucks and cars. So I don't know. You know, your question was, what would be a reasonable entry price on this? The reasonable entry would be if, in fact, you can time the next bottom. Should there be a next bottom? And if this is pulled back, to me, that would be that would be the time frame. Instead, I'd more focus on charts like this to really cement these patterns so that as you take a look at, different issues out there, you can buy these at a better entry point. Look, they don't all work either out here, but at least you've got a better probability and a lower entry price for something that could run to the moon, like this big cat out here. That's Caterpillar. Right now trading 156.02. It's near its all-time high. That doesn't scare me. What would probably scare me is not knowing if we're overdue for retracement. And as I have said, even like last week when we took a look, especially on Friday, we looked at the big picture and where the markets are headed to. But one must remember, I said we will have pullbacks. We will have the type of pullbacks or retracements that'll freak you out. That'll say, you know what, that Steve guy, he doesn't know jack. And the truth is, I don't know. Well, I know a jack up in Atlanta out there, but not many jacks, so to speak. Because hey, let me put it to you more succinctly. A 10% retracement is basically what? Nothing. Well, when you have the Dow priced at 2,500, a 2,500 pullback in points out there ain't nothing, even though it's basically nothing, just a 10% retracement. So I just think your timing might be off. I could be wrong. I just don't want you to chase it right here, and as Tom would say, Tom O'Brien, right now. That takes care of all of our requests that I see out there. So let's go back, with the exception of feeder cattle. Let's go back and take a look at feeder cattle and take a look at its A to B equals CD pattern out here. And that means we're going to go take a look at the daily chart. We pull up the daily chart out here. You can see it as clear as a bell. Your A point out here, and this, by the way, is the March contract. Your A point is on November the 3rd. Your B point out here is a low on November 20th. Nice little retracement into November 30th. And now, voila, you've got the basic the 1 to 1.272 A to B equals CD to the downside. Today is a bullish reversal candle. We don't see it because it's a bar chart out here, and I can't put this on my other system where it would clearly show up as a bullish reversal signal. I don't even have a red line out here. But what we do know at this stage of the game is you've got a buy the D point, let alone price came back into basically its swing points from back here in August of 2017. If we pull this chart back even a little bit further out here, it came back in essence into a consolidation area. That consolidation basically went on between May of 2017 all the way up into about September of 2017. So you had a 4-month consolidation. Now you've got the buy the D point. And what you want to see here for a confirmation that feeder cattle are going to run to the upside. And when I say upside, I'm referring to one of those retracement levels. And by retracement levels, we're referring to, 146.17, 151.04, 154.51. That's probably the target, is 154.51. But before that target gets fulfilled, you're going to need to see feeder cattle get back inside its box, so to speak. Now, you might say, Steve-O, oh, you mean back above 143.51, the bottom of that daily box out there. And I would say, good eyes. But nope, that's not what I was thinking. You see, today's candle has turned that wonderful orange color. Aren't you glad I asked you that question? Hey, in this case here, that suggests that we should see a brand new daily box form. But yes, 143.51 is the number right now, but there should be a new profile. That'll give you the back where your support is at and where the next level of resistance. So remind me tomorrow so we can go back and take a look at feeder cattle, see if a new profile forms. If it doesn't tomorrow, maybe it'll be the next day out here. And but otherwise, to me, the daily chart says buy with caution. You just simply want to get this thing back above one of the profiles, which might be one, into the future. That covers it all thus far. So let's go take a tour around some of the other things you and I should be taking a look at. What do we want to take a look at? I'd say the other thing is on the S&P 500, but it's really not the S&P 500. But I love this chart here because it's the S&P 500 grouped with that spot volatility index. And what we watch for here is, hey, Steve-O, what's happening around that 50-day exponential moving average line? That's 1033. We're trading at 1023 right now. 10 pennies. Does 10 pennies mean anything? It means a lot. Because should The spot volatility index closed above 1033, the 50-day exponential moving average. Price is going to run to 1122, give or take a few pennies out here, and that's where you could see some erosion out here. Now, that erosion could just be a test of that gap out here, and that gap that formed. Let's go ahead and expand this out. That's well, actually, that's what's being tested today. The gap is really the high of 2679.63. If you trade above that, all you've done today is test a breakout area. But hey, the VIX index, all it's done is test resistance, 1033. We'll be right back for that famous last segment where we'll wrap things up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. 2 requests that have come in, and we'll try to get these done in the next 2 minutes. One from SAT. Must be the College Board. Must be responsible for that SAT course out there. Well, that's kind of like a oxymoron, I suppose, because what the College Board wants us to take a look at is Aurora cannabis out there. Now, when we take a look at this chart here, there's not a whole heck of a lot of data to really go on to provide you with a lot of information out here. There wasn't really any trading in, so to speak, until about November 2016. This is the weekly chart that you and I are looking at, and very hard, if not basically impossible. However, you know, the impossible just means it's possible. But in this case, here, for me to tell you where this thing is headed to, it's impossible. I can't do it. And not that I don't want to do it. The only thing that I can say is right now on a daily basis, there's a swing point high from November 28th at 6.3 million shares. You're trading into it on light volume. So this could just be a consolidation pattern between about 686, down into the level of about, 478. It's about all I have. And I apologize. From a technical standpoint, there's just not a whole heck of a lot of information for us to look at. Now, that's a different story. And a request from Peter in Park City to go take a look at Goldilocks out here, and it is Goldilocks. If we go take a look at it right now, here's what you and I are going to see. Nice, strong leg off of that seventh wave move down there. That's when it formed the bottom, as well as that Tom DeMark setup. Prices headed to those Tom DeMark green dash lines out there. Today is going to be a Tom DeMark 8 setup. Be curious to see tomorrow's bar. Tomorrow's bar is not trading in bars 5 and 6 here. This is probably momentum, continued momentum to the upside. Nonetheless, 1300, 1310-ish, 1307 really becomes its target area out here. Before there's likely some kind of a pullback out there. I haven't really, Peter, checked much on the yen, gold, bond thing out here, but to the extent that they are correlated, well, today you've now got the yen futures trading above Stevie's red line. That could be bullish. All looks good for Goldilocks. Stay tuned, folks. I'm sure this is another great hour. And then you've got Tom O'Brien, 3 to 5. Andy Heck, 5 to 6. I'll be back with you on wonderful Wednesday. Have a great afternoon. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.